One of my private mentorship students just got a 20K payout from Top Step, and if you want to know how and exact strategy that I used, that I taught him, feel free to go and watch throughout this video. So I'm just going to show the Top Step payout real quick. This is from him. This is within Discord. Again, if you guys want to check all the reviews out, join the free Discord server. There's testimonials posted there all the time within that group chat. But anyway, let's get straight into it. So this is basically our trade recap, and this is a strategy that I utilized and I teach all my other students as well to use to get their payouts. And let's just go back in replay mode real quick. So we can see the kill zones as well as all the indicator markings. Okay, so make sure indicator is enabled without kill zones. Usually for my indicator, most times I do use kill zone or daily bias. IFG is useful, POI is useful, but these two you don't obviously need as much. But anyway, going into the indicators here, let's see, there should be a session marking here. There is. Let's see, where's the session marking? It's weird. Usually it would mark the session here. It's because it's in current session. That's why I have to uncheck this, high current session. Okay, so now it should show, because technically we're in 8 session here. So going over this trade here, basically 8 session kill zone open here, so I'm just gonna delete that text message. Let's go in the higher time frame first before we can go down to the lower time frame. So in the higher time frame, you can see we are obviously bullish, okay? And there's times where you need to be counter trending the higher time frame despite it being bullish, but in this case, I'll go over why I was still bullish here. We have this supply zone, okay? And I believe I marked this supply on the 30-minute, I believe, or 50-minute. Can't recall exactly, but I think I marked it a little bit off. So it should be this for the 30-minute here. That was supply, and I think it might have been the 1 hour actually. Let's see. Okay, so 1 hour supply is this entire thing, but depending on how big your zone is, this is a massive zone. And this comes from a little bit from experience as well, determining which POI markings are too big or too small. Like for gold, since we're trading on the 1 minute time frame, a 0.46% size POI is massive. So that's not good. All right, so you want to be refining this thing. Now, there's also a POC on a 30-minute there, but we're going to mark this 30-minute as our supply. Now, why was I bullish here? Well, first off, we took out 8 session low liquidity here, okay? We also mitigated high time frame demand. So if you go to the 1 hour, you can see we mitigated 1 hour and we held this 1 hour perfectly, giving us structure breaks to the upside. Like we have a break here to the upside. And whenever I tell you guys this all the time, if we're bullish and price already took out liquidity, mitigated demand or origin or some sort, I mean, highs are weak, right? So we're targeting basically the high. And so that's what I was basically doing on the lower time frame. So remember, we're off this 1 hour demand, okay? And we're looking for this high to get ran. I'm anticipating this supply to not hold, even though it is high time supply. Keep in mind, this is a weak high. Yes, you can still get shorts off the supply zone, but remember, at some point, price will just do a mitigation phase off of the supply, like this, to go higher. You can see there's still downside moves, right? But just be more careful. I'd rather trade with the trend. Again, you can make more risk reward taking both sides of the market, but the win rate will be slightly lower. So we hit the supply here. You can see in this case, this should have held here. It did not hold. We mitigate this demand here, and we continue higher here. And we even broke structure against it upside. Kill zone open here. And what was I looking at? I was looking at basically this demand here. Now, first off, this demand did not hold. I didn't get any type of confirmation here within this demand. Not even a candle break or impulse model. Therefore, there's no trade there. Okay, so let me just remove my indicator real quick to clean this up, because you guys know kill zone session opens here. So what happens here? Well, this becomes a liquidity sweep. Okay, you can also consider this inducement on the higher time frame for the POI rip below. So if we go to the 1 minute, you can consider this inducement or liquidity sweep. Now, sometimes it does get tricky when we have small ranges like these. And the main reason why it does get tricky is because if you think about it this way, you're looking at this leg structure. I don't see any other inducement here, because whenever you have a small range, you have a lot less internal candles. And because we have a lot less internal structure, it's not easier for us to just do an impulse and not have much structure to play with. Therefore, there's no inducement within this range here from this low to that high. Therefore, this can be considered inducement or liquidity sweep. Both are, by definition, fine with me. The point is, we swept this liquidity, we tapped into this PY right below, and what was my entry here? Very simple and straightforward. My entry was just an impulse model. Why, you may ask? Well, this is not an A plus delivery. I'd say this is more like an A, because from the top to the bottom of the range, it's not all impulsive or imbalances. However, getting towards closer to the range, towards the delivery of this PY here, you can see we have a lot of imbalance. And when we have a lot of imbalance like this, candles with the same color, getting near to our delivery of our PY, you can anticipate price to deliver impulsively as well, to fill these gaps immediately. Because I don't know if you guys know this, if you've been trading for quite some time, you know price loves filling imbalances very quickly, especially when we have multiple in a row like this, right? And so when we have this delivery, we can expect this to be impulsive. However, as we get closer to where price starts making more internal structure is not as impulsive like here, you can anticipate some sort of reaction, right? Because this is not all imbalances, right? This is just very choppy price action on lower time frame, structural time frame, price action delivery. So when we get up here, you can expect some potential chop or even not as clean delivery. You can see this did actually hold the supply here. We went lower, but look, we mitigated the flip exactly right here and went higher. So if you missed this initial entry here off the impulse model, right here off the candle break, so this is your impulse model, you just have a buy stop. For those that don't know how to enter impulse model, you can try to market order yourself, but personally I do recommend just having a buy stop so you get filled immediately. Because what happens to times with the impulse model is sometimes it will impulse so fast where you get a massive bullish candle and you're gonna have to enter here with market. Sometimes you get filled at a very bad price because of wicking and stuff. So be very careful. I recommend using a buy stop. Again, sell stop if you're trying to short. And where's my stop loss? Just covering the low there. This is 5-year sword, 5.06. Where's my TP? You can TP either at the week high here. You can even TP if you're not confident within the range here for 2.8, or you could TP at the high, which is what I did. This high right here. So if you even go to the high time frame, like we're trading at all-time highs here. Okay, if we're trading at all-time highs, you want to follow the trend once we have done the mitigation cycle or liquidity sweep like this. You don't want to be following the trend per se when we are not in that mitigation cycle yet. Let's say we're like all the way up here and you're still trying to buy up here. Doesn't make sense, right? So you want to make sure that you're putting the context puzzle pieces together in terms of structure. You don't want to be buying randomly like high. So come up here. This is my TP. If I just remove this here, there's a 5.06 risk reward. And you can see later, I believe I didn't take any more trades during this session. I could be wrong. Yeah, this was during another session. I'll cover this low trade maybe in another separate video. But this is today. I'm really just covering a session here. But yeah, essentially, I can go over potential setups real quick, going over this setup one more time. Some nuances about it. You can see if you wanted to be conservative with your trading, you can go for a 2.7 risk reward. Take the short here. Again, the short here, I would say this is good enough for impulse. We have multiple imbalances here. And this is all candles in the same direction almost. It doesn't have to be all candles in the same direction or color for the impulse model, by the way, but majority should be. So you can even take an impulse model here. So entry will be here, stop loss above. Where's your TP? Remember, a lot of you guys are making this one mistake that I do see, or some of you guys, and it is going for crazy targets, trying to cash reversal off a high time frame supply when we're high time frame bullish. Okay, doesn't make sense. Your odds of cashing a big trade like this, counter trending, is much lower than catching something like this with the trend. It's very common sense, but people tend to get stuck in their mind thinking the market is much more complicated than it really is in terms of trend. So please keep that in mind next time when you're trading. If you're doing a counter trend trade, you're TPing either here or here, okay, for 2 risk reward. So here's 2.72 risk reward. That's 4.78 risk reward. Now, all you're doing is just trading the mitigation cycle here. And again, this is a very small range here. It's only 11 candles. If you want to use impulse, you can. This isn't really an ideal situation where I would really use impulse. I mean, you can sure say the candles delivering to the PY are impulsive with imbalances in the same direction, but I'm not a huge fan of this. So for these kind of trades here, you have to either use I3G, OB, which never came back, or a limit order. Remember, limit orders are usually when you can use impulse models. So whenever price delivers like this in a small range, impulse model and limit orders are your best friend. So look at this. I mean, I could have made so much more risk reward taking both sides of the market here. 2.72, that's 4.7, plus another 4. That's 4.4. That's about like 9 risk reward here, right? Instead of 5 risk reward, I almost double my risk reward in a single day. Guys, keep in mind, this is only within 1 hour price action. You can make 9-10 risk reward within 1 hour price action when price has clean structure like this and clean draw on liquidity. Like this is extremely clear draw on liquidity towards this high. People that are trying to counter trend, don't have experience trading the market, they're going to take a potentially L here, winner here, winner here. But if you're getting TPing really far, you're not going to make it. Okay, so this is just an example of how you can trade both sides of the market and actually make more money than someone trading just one side of the market, trading pro trend. But again, I do recommend in general to just try sticking with the trend as much as you can. There's times with B plus setups where I would say you can definitely counter trend, but there's nuances to that I do cover within the course and mentorship with each student. So yeah, that's basically how you could trade this day. Again, I'm going over potential other setups aside from the ones I take because you guys think that's very helpful. So I'm going to add those into the latter part of these videos and recaps. Next setup here is a stop hunter they could have taken. Once they take out this high, now I would be a bit more cautious after taking out this high. I probably wouldn't take this personally because we already have taken out so many highs here, and this is the main high here. Again, this is such a strong high or such a weak high here, like a big high, prevalent high, that we can just get a pretty big move to downside from it. So I probably wouldn't take this stop hunter. But if you're just spamming an entry model, here's a stop hunter. Again, you can cover the buy to sell to buy depending on how small your stop loss is, or cover prior to mitigation, which barely misses. You can get like a 4.4 sword. But if I was trading this, I'll probably cover a little bit of the mitigation here, the sell to buy right here. Okay, there's no other wick on the other side, so usually in this case I just cover the wick right there and the body, or you can just cover honestly that like this, right? It's up to you. I think this is a glitch here also on the chart anyway. Sometimes that does happen where we have a volume imbalance where this candle closes here, so that means the next candle should open here, but it doesn't open here, it opens up here. So there's a smart technical error with the markets here, but what can you do? This is futures, it's centralized, everyone sees the same price point. It's not manipulated like certain forex brokers. Not going to really get into that. Just be careful when you're selecting your broker. Make sure it's regulated. But there's a 3.3 reward for a stop hunter setup. All right, this is your internal sweep. Now once we take out this high, once we get a stop hunter above a high, like I really don't want to continue taking stop hunters. Like I said, at some point price will reverse. All this will become liquidity at some point. So the higher up in the leg after taking out highs, you don't want to keep on stop hunting into your trades, unless there's only one situation where I would, and that's if we have a massive range, potentially to like huge imbalance on the left side here of price delivery, for example, and we're trying to trade up to it. And let's say this seems like a trend day using time theory where prices continuously slowly moves up. Keyword slowly. It's not impulse sailing like this. Like it's not giving impulse like mitigation cycles like this. It's slowly crawling up. Those are days where I can stop hunter, stop hunter, stop hunter, stop hunter. But on days like this where we're still creating structure, it's not really a slow climb up, right? Look at this. We're making structure here. It's not a slow climb up. A slow climb up would be something like, if you guys have traded trend days, you know exactly what I'm talking about. Especially when the market's at all-time highs, they become more prevalent. But I don't really see anything too obvious here. Like for example, I wouldn't say this is a slow climb up per se where you stop hunter, because we're still creating ranges here, right? But not like you can't take stop hunters, but I just be more cautious of taking multiple back to back. So anyway, let's go back to here. That would be your another setup you could have taken aside from the setup I took for 5 sword. And at this point, you can take a B plus counter trend trade here. Okay, we took out this high on the left. We also took out an internal high as manipulation. You can take this short here if you want to. Again, you can scalp this if you want. Usually I do scalp for my counter trend trades just for a 1-to-1. And if it's really close to a 1-to-1, like price could potentially reverse here instead of the PY right below. Sure, I just take my 0.85 risk score. It's not a huge deal, or I just go break even, since at this point, the price holds here is gonna likely go back to my entry anyway. So there's that trade. Again, if you want to take a normal setup, go into 50% of the range here. You can use this, or you can use 50% of this. Both either way are in discount here. And that's 2.2 risk reward. And look, it's very simple as trading, man. You guys are overcomplicating it too much. This is a flip. Why is this a flip? Well, it's not the extreme PY, but also it's a really good PY. And the reason why is because this used to be supply. We broke above it. Now this demand is acting as the demand that broke the supply. Therefore, this is the flip. This is like a break and retest if you want to call it, but with zones, right? We broke above this. This is your retested demand zone. Price comes back, goes higher. So you could have taken something like this. I believe this was still, okay, this is still inside kill zone. I don't remember clearly why I stopped trading here personally on this day, but this was definitely like the most clear, probably best setup personally in my opinion at time, just because we had a clear draw. Like once we take out previous day high, even though if we're bullish, there's times where I will see we completely reverse the trend all the way back down before we continue higher. Sometimes even taking out like, liquidity, which is very far. So this would be the best setup since the high is very easily identifiable as weak. Everyone's basically trading towards that high if you're smart. Here is the OB entry model, depending on where you want to cover your OB, and then you just target the high. So that's another potential setup you could have taken, and it works out right there as you can see. And at that point, you can keep trading with the trend or whatever you want to do. So hope you guys do enjoy today's trade recap. Man, if you guys do enjoy this video, make sure to leave a like, comment, subscribe. Let me know what you take most out of these trade recaps and what other types of videos you guys will find helpful in the future. If you want to join the Prime Mentorship and get massive payouts like my other students, click the link down below to apply, or you can learn at your own pace with the 100 Sword course. I'll see you guys in the next video. Peace.